So in this video, I'm going to be breaking down my trading strategy that has made me almost $3,000 in a month and a half via paper trading. Essentially, I'm just showing you guys what makes me confident in taking up a trade in my journey to becoming a profitable trader who makes over $1,000 a day in trading. Today, I'm going to be showing you guys this via a backtesting website called FX Replay. No, I'm not sponsored. And that's because the market is currently closed. So let's hop right into the charts. Initially, when I'm looking at the chart, the first thing I look for is one, key time frames, key time frame trends. So essentially, I'm looking for what are the highs and lows of the 5 minute time frame, the 15-minute time frame, the 1 hour time frame, and then what are the highs and lows of the previous day. The closest low that I see on the 5 minute time frame that hasn't been knocked out already, because this would be a low, but it's been knocked out, is right around here. Then I look for the high on the 5 minute time frame, and the most recent high is right here. Boom. Now we switch to the 15-minute time frame. On the 15-minute time frame, we have the 5 minute low right here, which is already the 15 minutes low as well, so we don't worry about that. Now we look at the 15-minute high, which is right here. That's the most recent 15-minute high right there, right around this area. I don't know if y'all can see. Just want to show y'all. Now we go to the 1 minute time frame, and we find out this high and low. So the most recent high on the 1 hour time frame is right here. These two candlesticks right here, up, and then move down. Then the most recent low on the 1 hour time frame is right here. Then move down, then move up. Now, typically I go either on the 1 hour or the 4 hour to look at the previous day, so it's more easy to spot. So as we can see, the previous day's lowest point is right here, and the highest point of the previous day has already been knocked out, so we don't worry about that. So once I've spotted out all of the key time frames, next I like to see where the market move. I watch for a break of structure or any key confluence that shows where market wants to go for the day. Watch for key confluences as the market opens. 3, this is a side note in a sense, but I typically like to keep the range that I'm trading at from around 8:50 to 10 o'clock Central Standard Time, keeping my trading period between 8:50 to 10 o'clock. So there's no specific reason for this that has anything to do with the market. It's more of a personal reason. If I can keep my trading time period low, that means every single day I understand the pattern within that time period and get more familiar in that general area. Whilst also the reason why I don't trade as soon as market open is because I'm not comfortable with trading off of demand and hype immediately as the market open, and I'd rather give myself time to watch and see where the market wants to go instead of immediately hopping in. So we're gonna watch the market open. I stay on the 5 minute time frame just to see where it breaks structure, and as we can see, we've already broken the 15-minute low, the 5 minute low, and the 1 hour low. Now we're waiting for a candle close. If it closes below both of these, it signifies that it wants to go lower. And as you can see, the candle has closed below those key time frame lows. Now, number 4, when I see a break towards those lows or those highs, I look for the higher time frame trend. So, as we can see on the higher time frame, this trend is bullish. It wants to continue going upwards. But on lower time frames, we see that it has done a break of structure and is heading downwards. This shows me that it's just claiming liquidity and it wants to do a reversal back to the uptrend. So now I continue to wait until that trading period that I'm comfortable with is hit. As I see right here, I peep a fair value gap. Now, this fair value gap is right here. It's the 5 minute time frame fair value gap. Now, what I could do since we're reaching around the time where I typically trade, I sometimes go into the 1 minute time frame to watch and see if it hits this fair value gap and where directly does it hit inside this fair value gap to understand if I want to trade on a put, on it going down even more, or on a buy of it going up and reaching those previous day highs. So we're going to go into the 1 minute time frame. Now I typically have this line right here in the middle to understand equilibrium and where it's going. As we can see with this fair value gap, it's continuing its downtrend. But as we continue to go down, we see another 1 minute key time fluence, another fair value gap. But this is a bearish fair value gap. As we can see, we closed around the 3/4 way, which shows me it wants to continue to go downwards. I'm also seeing bullish hammer sticks, which signifies that the buyers are outweighing the sellers currently. Now I see a break of structure. Break of structure towards the uptrend because we went past previous highs right here. So this is where I typically would enter in a buy because we're in the time frame where I would usually trade, and we watch where the market goes. So I'm going to place a long position here, place my stop loss right underneath where my predictability, where my hypothesis of where the market would go is denied. Typically, I look for a 1 to 2 ratio. In this case, it could go anywhere all the way up to here, but I'm not looking for too much of a crazy reward right now since I'm still very new to trading. So I want to go to this previous fair value gap. I'm looking for with a 1 to 2 ratio, just above it. Place my buy order in. Right now, I got 2 lots. Place my stop loss where I've already set it. And I place my take profit for the 1 to 2 ratio. And we watch the market go. Intervention. But as I was saying, that's also why we keep our stop losses tight and close. Since we're new traders, very inexperienced, even sudden market shifts can throw off the whole plan. So we want to lose as much as possible with gaining a good return at the same time. So now I usually try to take one trade a day just so that I don't get emotional, a revenge trade, and end up losing way more profit than I should in one day. So using FX replay, I remove all the drawings and we go to the next day. As you can see for yesterday, I'm wondering if you guys can hear me, might be connected to my phone. Yeah, as you can see for yesterday, the plan that we had did take action soon after we left the charts for the day. It's just that you have to be patient. You don't want to rush things. You don't want to put too much money into the market and end up losing way more than you expected to lose because you don't know what's going to happen, even though our strategy did play out in the end. So now we do the same thing as yesterday. We mark out our 5 minute highs and lows right here and right here. Now I move to the 15 minute time frame. Most recent high has already been taken out, which is right here, right here. And our most recent low is currently right there. So we go to the 1 hour time frame. Our most recent high has already been taken out. Actually, it has not been taken out. It's all the way up here. A move up, then a move down. Our most recent low, which is a move down, then a move up, has not also been taken out either. So, right here. Now that we're in the 1 minute time frame, go to our previous day high and previous day low, which is right here. Right here. We have a great market structure for this time. We're looking more towards a bullish trend as we see, still continuing to push up. So, I'm expecting, since market is looking very good right now, that we're going to continue moving upwards. Now, we watch the market play out. So, as right now, it is 8:35. It's not currently time for me to trade yet, but we see a break towards the uptrend. So, I want to see I go down to the 1 minute chart, and we watch what's happening. Right? We just watched a claim in liquidity, and it's almost time for when we're going to trade. So I'm willing to take my trade right here, especially since we didn't close. We closed directly on the same spot, which shows a great resistance point, which means I place a buy. We put my stop loss right under where we expect the market to break our hypothesis. I take my longs position and do a 1 to 2, which would be up here. But with this one, get a little greedy. A 1 to 5 because we can see it maybe touching previous day highs, and we already have a point to where it has made it to prior. So take my take profits and place it at the previous day high. Now we watch the market. We put our stop loss close. Now, for instance, I still believe it will go up to where I place my my take profits. As we can see, we did lose in that trend. We did lose in that trade, but I will continue to watch and see where this market goes to understand if my hypotheses are correct. So for today, we did indeed take another loss. Now, as we can see, this is why we keep our stop loss close. I want to get a win for you guys today before I close this video out, but we have to move on to the next day because we don't want to overtrade and lose more money than we should. As we can see, the market is continuing to push upwards. Our hypotheses have just been slightly incorrect so far. So another day goes by, and let's watch and see where we go. So I look for the 5 minute low and high. As soon as market opens, our 5 minute low has been broken. Our 5 minute high is right here. We look for 15 minute high and low. 15 minute low has been broken. Our 15 minute high is right here, most recent. This doesn't count just because we're currently in the trend of that candlestick. We look for the 1 hour high and low. The 1 hour high is all the way up here, and the 1 hour low has already been broken. So, right now, it looks like the market wants to claim all the liquidity from these buy orders, and we're going to catch it at the bottom of its trend. So, We look for the previous day low. Previous day to Monday, its low would be, what is this? This is the 12th. The 11th is Sunday. Sunday's low is right here. Down and move up. So we want to see where the market plans on going today. All right. So as we can see on this one, it currently wants to go down on a 5 minute trend. We go on the 15-minute trend. It currently wants to go down. This is a complete break in structure. And now we could place a sell on it going down since we see a current move upwards. So we're watching for another break towards the downtrend. Well, not yet. The candle didn't close in this downtrend. We see a break towards the uptrend, signifying a change in direction. We see a candle closure, and we place a sell order right here. We place our stop loss above where our hypothesis will be nullified. So, sorry, right around this breakup structure right here. Now I place my shorts position on where I bought. We can even go as far as previous day lows on this one, but we be more strategic, and I go for a 1 to 2 ratio, and we watch it play out. First, we have to take. First, we have to place our take profits though. So with that being said, that is all I want to show you guys for my strategy today. Sadly, in this video, we couldn't get any wins for you guys, any profits during this session, but that is how I strategize the market. That is how I feel confident in taking trades. I put tight stop losses just so I don't lose as much of my capital while also going for 1 to 2 profits. That'll be all for this video. I want you guys to like and subscribe and stay tuned for the journey to $1,000 a day. And I'm out. See you guys in the next one.